Hello, hi. Um, Today, I just like to share with you two banking stocks. Um, if you look at this Deutsche Bank, since the war, the shares have dropped to about 40 to 50% level. And then I'd like to share with you Barclays Bank as well. It was at 208 and it's dropped around 20%. It reaches an all-time high of 217. So the PE ratio for Barclays is about 4.46. It's a very good dividend stocks as well at 3.767. PE ratio also has gone down for Deutsche Bank. The industry average PE for banks would be around 10 to 15, and this one has a 2% as well. These two stocks that I mentioned, although they are banks in UK and banks in Germany, these are actually. Oh, sorry. I think I need to show you the US share chart. Yeah, this is the US share chart, which is give you a 1 year. It was 15 and dropped to 10. This is the one I think you should be investing in if you have US dollars, so you don't have to have the currency conversion issue. It very similar. It trades like shadowing the actual stocks that is traded in the German stock exchange. So the reason you have been, of course, depends on your view of whether how you see the war is. If you see that the war is going to be ending soon, as Ukraine has been kind of surrounded, even the border that's between Ukraine and Poland, Russia has already gotten a few of the towns that is near to their border. So, because the supply of food and medicine and all that only comes from the west coast, which is from Poland side. The north you get Belarus, and the east you get Crimea and Russia. So, and if they are blocking off the west side of Ukraine, it's just a matter of time. Like will be captured. So if you think that there's no more additional wars like onto Moldova or the non-NATO countries like Uzbekistan and Kazakhstan, right? Then I think this is probably the lowest that the stock may go for this moment. Uh, of course, there are many stocks that are have dropped a lot, from like 50% to about 90%. Um, if you are looking for uh, the March 2020 type of crash where stocks are down 50 to 80%, right? Now is probably the time, very similar. Of course, we are nearer to the bottom than at the high side. So the risk and reward ratio is it looks like, of course, it will go down further, but it will look like it's lesser risk, and looks like the reward is there, especially if you pick on good companies. Of course, there are many, like I mentioned, there are many sectors of stocks that have gone down a lot recently. You've got the China tech stocks, Alibaba, Baidu, and all that as well. If they are having delisting fears and all that. You got the very popular tech stocks, small medium cap tech stocks. That is disruptive in technology, kind of like Lemonade, Palantir, UiPath, or even cyber security stocks like CrowdStrike and all that. They are like the new boys in town. Or you can go for something that's traditional, like Deutsche Bank and Barclays. They are definitely here to stay. Take note that Deutsche Bank actually is 8% owned by China. So I just wanted to just quickly give you this brief. Um, it's about 9% of the shareholdings. Um, second. Yeah, it's in May 2007, Chinese conglomerate HNA Group became its largest shareholder, owning 9.9% of the shares. HNA Group stakes reduced to 8.8% in February. So, bank's Frankfurt offices were raided by office in investigation on the Panama Papers and money laundering. So uh, yeah, this is the part where I think you can just ignore this is the period where they were I think Deutsche Bank as well as HSBC, yeah, there were some AMLA kind of cases, the illegal money laundering kind of situation where or how to say drug monies, but these were the past lah. I just want to quickly show you the fourth quarterly report of Deutsche Bank. It's amazing. It's really amazing. Um, Pre-tax profit taxes rises threefold to 3.4 billion. Adjusted profit before tax 4.8 billion, more than double 2020. Fourth quarter profit before tax 82 million euro, and announced intention to distribute approximately 700 million euro capital by way of dividends to shareholders. Um, yeah, I will put a link now of this news. Their revenue growth 6% year on year, very steady. Momentum growth in the fourth quarter 8%. So it's um, it's for stocks, right? I mean, as you see now, the definitely Canada and US and as well as England, they are the three NATO countries. I think they are quite insulated lah. I mean, especially US, they are also a net exporter in oil and all that, right? But if you're looking at Germany and France and all that, they are pretty much in a war zone, whether it is economically or in or at least with a greatest amount of fear. So if you're a bit worried, then maybe you can go for the stocks in Barclays, which is based in England, or NatWest, or Deutsche Bank is definitely a German stock. If you can see that fourth quarterly report is really good, but as you know that many banks are pulling out of Russia in especially they may be doing some financing of some oil related companies or some MNCs in Russia whereby they are pulling out, and there are definitely loans whereby they need to write off, and the war definitely started in kind of like late February, early March. I mean, yeah, middle of February. So you will see the first quarter report in 2022 will be affected, by some of the write-off in their debts, similar as you can see here, like when you put that. Wait, let me see. Loss before tax, reduce leverage exposure. Yeah. Okay. But anyway, so it's in 2021, we increased our net profit fourfold and delivered our best result in 10 years of putting almost all of our expected transformation behind us. Four core businesses perform ahead, so they are doing extremely well. I think if it's just the war on Ukraine and Russia, it will definitely affect their balance sheet and P&L. But I think looking ahead, if the war is short, right, this company is doing well. So put this in a watch list. If you are looking at good price banking stocks, right, maybe these few recommendations are the one. So thank you. Please click a like